This is Ken Lake with MAC's Technical Market Update for Friday, January 13th. USDA report shakeout is pretty much complete here with soybeans selling higher, corn a little bit higher, wheat a little bit lower today. I'm going to start with March corn. Notice that I've zoomed into the recent 7 months trade. I don't believe that the trades above this period are going to come into play whatsoever for this foreseeable future. So for those that do have either a delayed price corn or corn in store, this is the chart that I'm going to be making recommendations for the short term here. Notice that we have lower highs and higher lows, compressing the March corn market into a bit of a compression feature. That usually what happens in these periods is that this market is poised for a breakout. We just don't know which way it's going to go. It could be higher or lower. I think downside risk is limited, upside risk is limited as well, and the moving averages that I track are all tracking sideways right now, with resistance up here at this 367, which is the high that we put in mid-October. The recommendation that I have for holders of old crop corn is to use this 365 to 370 area as a target to price old crop corn in, and then just watch the fundamentals closely to see if we're using up old crop stocks or tightening up supplies whatsoever. My fear is that we're going to probably be in a sideways sort of a pattern for the foreseeable future. Switching to December corn, showing me the same sideways pattern between 376 and 394. However, we have had a chance to sell this 390 mark a couple of times. Again, lower highs, higher lows, in a compression sort of a range here, and considering that we are going to see new crop acres down, this could trend to get a little better for us. So targets here should be in this 388 range to 390 range to set new crop hedges for corn. Switching to March soybeans. We've been proponents for selling soybeans for quite some time, especially after this period right here. This area represents about a 20% range, or at least a trading range that's within 20% of the old high. And with the kind of soybean crop we have and supplies we have, we don't think there's any reason to think that soybean prices could get any better unless we get into a South American weather issue, which still has not developed. Momentum indicators are overbought due to correct lower. Holders of old crop beans should be rewarding the market here, and you should be making sales. November soybeans analyze similarly. This chart is a little busy. I'll try to sort it out for you. The purple lines, as I explained last night, are the standard deviation bands that I watch, and at this point right here yesterday in the up 30 range showed that this market was extending into ranges that it normally does not trade. That's a good sell signal for us, which we would have took advantage yesterday of this move and sell new crop soybeans. The continuation happened here today, so once again, with cash bids in the 975 range locally, we recommend that farmers advance their 2017 new crop sales coverage. I'll talk a little bit about wheat here now, and on March wheat. Sideways pace here for about a week or so, but an overbought situation. So I am looking for a little bit of a correction lower. We'll call support at 415 to 412 in the March wheat. However, now that we're into the period when the Southwest comes out of dormancy within the next 6 weeks, we would expect to see some crop conditions report that could be helpful for us, and we're gonna hold off on sales for the old crop or DP wheat until we can retrace about 50% of this move. Gets us back into this 437 to 450 range to make sales in the old crop or March wheat. New crop wheat, finally getting into some place where we might be able to make some sales here. Once again, we want to probably target sales in a range here in this 50% retracement value, which we did reach today at 450 futures. I'd place targets in the 465 to 485 range with overhead resistance at this 200-day moving average, which is about 482. Market overbought, due for correction lower. Call support 442 for now.